So what are we doing today?
Looking at a couple Canadian properties under 250K, trying to figure out if there is an investment thesis with cheaper properties. Considering most properties, anyways, that I've been looking at investing in are like 900K and above.
Yep.
Just trying to see what's out there in the market for things that are like guaranteed affordable for our generation.
Yeah, and I think the sort of why behind that, if you were to go sort of the Simon Sinek route, he's the one who wrote Start With
Yeah.
Why, right? Would be that, investing in real estate or housing is becoming less and less accessible for young people. And even the high earners, who in most cases, if you're a really high earner outside of maybe Bay Street in Canada, you're probably self-employed or working in an industry that isn't easy for you to get lending. And I know that, I know a lot of guys who make 500K a year and can't get a mortgage. And so the idea is, where can you maximize your buying power and still sort of like without, because I think perhaps and potentially the idea of owning your principal residence might just be inflated away from us in the next 6 months for the average young Canadian. And so the idea is there a way that you could potentially balance maybe capitalizing on a buyer who owns a negative cap rate condo in Toronto, and you're renting it and you're getting a good market rent, much cheaper than it would cost you on a mortgage basis, and your money's working for you elsewhere, making a 10% rate of return in a sub market. And does that make sense? Is there too much stress associated with it? Does it accomplish your lifestyle goals, which I think is something that we can touch on with vacation rentals. So yeah, so I'm looking forward to reviewing these. I haven't seen, as a disclaimer, I haven't seen a single one of them. So it'll be pretty raw. So do you want me to just screen share and then go from there?
Yeah, let's do it.
All right. I am right here. Can you see it?
I can see, yep, I can see it.
Maybe I'll make this widescreen.
Yeah, that's better. There we go.
All right, so I'm on realtor.ca. I'm going to pull up 255 Angela Ave in Princeton, British Columbia.
Cool.
Under 250K, which is what I forgot to mention in the little intro there, that most people, I think even a single individual, could qualify for a $250,000 mortgage. It's relatively accessible savings goal to get that 80% loan to value on a 250K. You got to save 50, maybe 60 grand for closing costs and down payment. And
yeah, what is that? That's like 49, 50.
Yeah. Okay, so we've got a 1-bedroom, 1-bathroom in Princeton, British Columbia. Do you know much about Princeton? Like, are we?
So I picked the location. I'm pretty sure this is the one that's like 30 minutes from both Vernon and Kelowna, which are both like decent sized towns.
Okay.
I think that this is the one.
Let me just.
And also here, like it doesn't look like that small of a town.
Okay, so.
Let's see. Yeah.
So you got Kelowna there, and yeah, I mean it's.
Okay, no, it's probably further. It's like probably an hour from Kelowna-ish.
Okay. Maybe like what now? 2 hours from Van.
Yeah.
Okay, so from your perspective, like who's living in this town? What would be the buyers that are looking at this property?
Currently, I don't know, but it's close to a couple ski mountains.
Okay.
And it's close enough to the States, which I think is valuable.
Yeah, I think the States is nice as from an investment thesis perspective, as a lot of guys who are buying senior focused stuff in Ontario, they like stuff close to the border because you get a lot of snowbirds who maybe want to be able to jump the border, get a flight out of Buffalo or wherever, upstate New York, to when they want to go down south in the winter. And then the other things would be like casinos, things like that.
Yeah.
So it appears to be in a pretty stabilized residential area. You've got some houses close by. So probably not going to qualify on that sort of maybe ski, like if you're going to go to the ski country, the thesis that you see a lot in Ontario, where you can go buy a cheap cottage or cottagey property, like Keswick would have been a good example maybe 6 months ago.
Yeah.
You go buy an old cottage with beach access or walk to the lake or whatever, and you rent it out as an Airbnb. I guess the big thing would be determining whether or not you could rent this out, like if it would do well as a just a rental opportunity. Because I don't see it from I don't see it really qualifying from the vacation rental perspective.
Yeah. Yeah, I don't think it's close enough to a ski town where people would want to just stay there.
Right.
255.
Okay, let me just, so then what I'll do is where would most people look for rentals in BC? Kijiji?
Yeah, Kijiji, Craigslist, and Facebook Marketplace.
Okay. So we will Princeton. So this is like where I would sort of start doing my discovery on whether or not this is worth making a drive to go look at.
Yeah.
I'm just trying to change my Kijiji criteria here. But, you know, if it seems like you've got, I can't, sorry, I'm trying to change my
Thing from Markham.
It'll only give me Ontario on Kijiji. Let me just see if I can Google it maybe. So again, just getting a high level idea of, so there's Airbnb's got the top Google ad spot, which is interesting, and Vrbo. So maybe it is a decent vacation rental market. If that's the case, I mean, it appears to be, given that you have Airbnb and Vrbo bidding for the top ad spots. I guess the question, so maybe actually we'll look at the Airbnb.
I think it's a big mining town.
Okay.
So like copper, gold, coal, and some platinum is what I'm reading.
Okay.
The biggest employers are Copper Mountain Mine.
Okay.
And a saw.
Ooh, the old brothel. That's interesting. So it looks like pretty good on the vacation rental side of things. So maybe if you could ultimately get a vacation rental that qualified a little bit better, like that wasn't sort of in a stabilized residential area, but if you get something that looked a little bit more comparable to some of these.
That's interesting. 116 reviews for this one.
Yeah, like, and that's for like RV pads. Like that's going almost with your tiny house thesis, right?
Yeah.
You've got an inn here, 1 bed plus kitchenette. Like these are lots of reviews.
That's actually interesting. I wasn't expecting this one to come up with anything.
There's another one, like a camper RV park.
Yeah, I think it's on a river, so I think fishing is big there.
Right. Okay. So yeah, so you've got there's definitely some potential there on that investment thesis. So maybe just this product doesn't fit that so well. I don't think. I mean, you could probably do all right with it, but it might not be the sort of that what you need to kind of stand out as a super host or whatever. So it might not have super host potential. Don't see any Kijiji here. Oh, there we go. For rent Princeton. So the next thing that I'll do to determine whether or not it could do well from a rental perspective, and maybe even if you could find a product similar to this that had 2 rentals, so you almost benefited from having vacation upstairs and the stability of you know, the long-term rent in the basement. So you've got, this is Burnaby, it looks like.
Yeah, Penticton.
Trailer home for
promising market. There's nothing even in Princeton.
A couple of ads that are not relevant. So it's undersupplied. I mean, that counts for something. Is this all of BC? Rent Princeton. So literally nothing available for a long-term rental in town, which is pretty wild. So yeah, I mean, from my perspective, I think that, you know, it might be worth, this is honestly where I might actually tie up a property and put the interior photos up for for rent on Kijiji to see if I can get somebody who might pay
Is it
me and if somebody's willing to rent it for a at a value that would be cash positive, that would be, from my perspective, a good start to.
Can you do that? Can you just take photos?
It's funny, like I've been talking. Yeah, I mean, well, you could if you asked, as a condition of purchasing the property, if you would have permission to market it.
True.
And it's considered maybe a bit unethical. I'll let other people decide whether or not or how they want to do the moral work of deciding whether or not that's what they want to do. But it's very common amongst institutions.
Yeah.
Where I learned it. So, okay, let's check out this other one, Headley.
Yeah, this is like a similar, pretty much the exact same type of thing. It's in a town like right beside. It's a lot smaller of a town.
Right. So I think this one, and maybe I misinterpreted the original, but I like it a little bit more as an Airbnb because you almost get like it, just seeing that second photo there on the list,
Yeah.
like Sedona, Arizona vibes, like obviously much less developed, but you could get, like, if you got an Airbnb in downtown Sedona, like, people want that walkability. They want like a lot of these things. So maybe if there's a lot of stuff to do around that is automobile dependent anyway, at the end of the day, people can come back and they can go get their food or grocery shop or whatever, and kind of like, be a more like immersive tourist and spend more time in the local community, etc. So like, to me, the home, just looking at it here, it's got a lot of pluses. Lifetime roof there, which is great. So you've got a steel roof. I'm looking at it here in the photos. It appears to be vacant, which from my perspective is great because you might be able to get some flexibility on price with a fast closing. So that's one of the little nuances that you might be worth thinking about. There's, from my perspective, and the other one had this as well, but there is some add value potential. Like, if you guys were looking for a property to create a little bit of equity in, you could buy this really cheap, add a bunch of value, flip it out as a nice Airbnb.
Yeah.
So maybe worth investigating whether or not there is an Airbnb market in Headley, BC. So we've got a cottage with a view, 119. That's a super host. So, I mean, it's kind of got that super host potential in the market. River House Retreat looks beautiful with along the river there. Tough to compete with this type of product.
Yeah. Unless it was like amazing inside.
Yeah, or like you could do, like, I think I often look to the States to see sort of, I've always done this with like real estate broker trends to see, like, I think that they're often quite a bit ahead of us.
Yeah.
You could almost look to the States to a place like a comparable market in the US that you might be able to find something similar. Like here you've got the river trailer. So this is likely a trailer park rental. Or a trailer on a lot on the river. I'll click on it maybe to just see if it's. And then maybe we can see some rental rates, what you could expect. One of the tools that I'll use when I'm trying to evaluate a market is AirDNA. So it'll actually tell you like the trends, how many days of the year you could expect to be leased out. So if you go on, yeah, maybe once we pick a market that seems the most prime for this investment thesis, and when we circle back on maybe focusing on doing an episode focused on vacation rentals, I can show that tool. I'll briefly touch on it today, but I'll show you it's pretty cool.
Yeah, I pulled a cool listing that I think is pretty perfect for a vacation rental. It might be next.
Okay, cool. But and then I guess the other element would be, okay, so I think this listing that we were looking at, I just want to see the setting on this trailer listing. Well, there's 51 photos for us to get through, but is this a potential comp, right? Like that's all like paneled wall, like it's photographed quite nicely, but like this is something I think you're capable of bringing that main road home up to this standard. again, do I think that there is, yeah, this is going to take me a while to get to a maybe there's no photos of the lot because the lot isn't that impressive. I'm going to go with that. Um, there's another one. This looks, based on the backdrop there, that it probably is in a similar location to the one that you sent.
Mhm.
Um,
It looks like there is quite a few in Penticton because Penticton is originally like one of the main markets we were looking at.
yeah.
It is a bit higher price point, like it's not in the 250 range, but it could make sense.
Yeah. Yeah. So 840 Scott, maybe like I like the price point a lot. At
Yeah,
170K,
super
I
cheap.
mean, you're literally like 60% less than the other one.
Yeah.
I think the next step would be evaluating what the Airbnb rental potential is, like how much money you could make. And then when I think, and when I talk to people about investing in vacation rentals, one of the things that I think about is like, it might be worth considering that you buy something that you would go and stay at. So you get a cottage that, pays for itself or makes you money. And I've seen a lot of people do
Mhm.
this very successfully, right? So,
The next one,
okay, so let's
like
get
this,
to it.
it might be a
Is this
no.
it?
Yeah, this
Well,
is it.
okay, perfect. Yeah, so I mean, this is really charming, very
Look how
attractive.
cute it is.
It's awesome. Yeah, very attractive little A-frame cottage. Um, right off the bat, like my major concern with something like this would just be ensuring that everything was done with permits and to municipal standards, because a lot of
Yeah.
things don't qualify for that. But yeah, I mean, from my perspective, this thing would be a hell of a Airbnb rental. It does look pretty miniature, like that. Just
Wait, how do you figure out
that.
it's built to permit or
Uh,
state
you could go through the due diligence process of figuring it out, call the town, ask them what they have in regards to a survey and permits based on what you've seen online, and that's within your right. That's public information. So, or you could just actually have the seller warrant that it was done to those standards, which is typically what I'll do. Like basically, so that they're assuming the risk. Like they're basically saying, yes, everything on the property was done to code and everything. And this is one that I would agree, like similar to the last one. I think there is add value potential here. Like this thing
Yeah.
I can see being one of those like Instagram famous A-frame cabins if it was done up really, really nice, right? And I think
Mhm.
based on your design taste and then like the skill set between the two of you guys renovating could really do that pretty easily. So like something you could execute, and the price point's amazing.
What
the
is the 180 Porcupine Road? I didn't really look into the location too much.
So the only thing that might be worth thinking about for something like this, because it's more remote, like the other two could pass pretty easily as a primary residence. So if you wanted to qualify for a CMHC mortgage, an insured mortgage, you could maybe get a 95% loan to value on the other two. This one may look a little too cottagey for a bank underwriter to say, yeah, I believe that you're going to live in that. But within the boundaries of what is a principal residence, like a lot of people will, I'll find, play the game with the lenders, and this is literal mortgage fraud that happens on a regular basis. And I've actually talked to you about it. Like
Mhm.
people will say, "Oh, I'm going to live in this," or it's a second home or a cottage or whatever, and I want a 95% loan to value on it, and then they'll just rent it out, right? So they're basically getting lower down payments, so lower cash position, more debt, but they're not actually fulfilling the duty of the mortgage, which is to move into the property.
Right.
So, for, given that you're already going with a 20% down, or that's sort of your objective anyway, and if that's accessible for something like this, I think you've approached it the way that most buyers should be approaching it, and often you'll find properties that don't qualify for CMHC financing have a hard time selling it. And based on this listing and the price point, it looks really attractive. I'm surprised it hasn't sold. So I'm wondering if that might be the case. Um,
Hmm.
and so maybe it's the road isn't cleared, or it's a private road, or there's some sort of stipulation that a bank underwriter might not want to
Yeah, I can't find it on
traditional mortgage.
Google Maps right now.
So
So,
there is a map. Oh, there isn't even a map on the listing. So
oh, how do you spell the?
strata lot. So it might. Oh, so yeah. So there you go. Within the legal description, it's a
What does that mean?
condo lot. Like, so this is technically a condominium. So it's probably like similar to a trailer park or a land lease structure.
No.
which could really challenge you from a lending perspective. But maybe worth actually talking a bit about the land lease concept.
Maybe it's because it's on the mountain, Mount Baldy.
It just says strata lot 91 district.
Oh, tucked away on a private large lot. Oh, so you don't even own the land, you just own the cabin.
Tough to say, like, given the title, it says condominium strata there, under title. Like, I'd have to look into it a little bit, and I'm happy to. It might be worthwhile, but could present some challenges from a financing perspective, just to be aware of.
Yeah.
And sometimes when the properties are having a hard time financing, like, this is probably a property that's been in a family for a long time. Maybe they own it outright. Maybe, and if it's unlikely that it's their principal residence, so it would be subject to capital gains. Maybe you approach them and say, look, I would love to purchase your property, but I'd like a vendor take back mortgage of 80%, right? And you give them 50 or 60 grand cash, and they hold the mortgage for you. They become the bank. This looks like a really good candidate for a vendor take back deal.
Can you explain vendor take back a little bit further?
Yeah. So a vendor take back mortgage is basically an agreement in which the seller agrees to act as the bank in a transaction. So basically, the seller will hold the mortgage because they own it cash, so that or close to cash, but they have 100% equity in the property, let's say.
Mm-hmm.
And so they're lending you that equity. So you're agreeing to pay them $250,000 for the or $230,000 for the property. You give them a down payment of $60,000, and they lend you the remaining amount, so $170,000. And you make them payments. You can do it on a traditional amortization schedule. It can functionally look exactly like a bank loan. You could ask them for a market interest rate, or you could offer them a little bit of higher of an interest rate. The advantage to this, sorry, was that clear enough?
Yeah.
Okay.
Why would I do that though?
Well, one, you don't have to qualify with the bank for the mortgage. So as long as the seller's happy with your income, credit, whatever you show them to underwrite the deal, they're the bank. So if they decide they want to lend the money to you, they can do that. And number two, often isn't registered on your bureau. Not a lot of vendor takebacks or vendors who are giving vendor takebacks have the resources to register this type of mortgage on your credit bureau. So it might just never show up, which could be advantageous from a future underwriting perspective if you want to do another deal.
Mm-hmm.
I guess beyond that, yeah, I mean, those would probably be the two big ones, but yeah, so you don't need to be, and then there are also incentives for the seller. So the seller in this case would have to pay capital gains on this property unless it's their primary residence. So if they paid $10,000 for this property and they want to sell it, let's say they paid 10 grand for the property. So, and you get it now, all of a sudden that $200,000 difference is capital gain. So they have to pay tax on that money. Basically what capital gain is they take half of the capital gain and they add it to your income for that year.
Mm-hmm.
If you do a vendor take back, it allows you to realize that capital gain over, let's say, 5 years. It's to a maximum of 5 years. So you can spread the capital gain out. So if somebody's a high earner, so they have to be paying a lot of capital gains, or they just want to mitigate the tax exposure, it's advantageous for a seller to do that as well.
Interesting.
Yeah. It's a little
And
bit.
then so if I did that, I still own the property?
Yeah, you would own the property, you would take possession of it. They would likely register the vendor take back mortgage as a charge on title, the same way a regular mortgage would be registered. So you couldn't just go sell the property, take the cash, and leave the mortgage behind for somebody else.
Yeah.
And so then maybe in a couple of years, once you've built a little bit more equity in the property and have a relationship with a good lender or something like that, you could have that replaced with more normal debt. Usually when we go in with vendor take back deals, we'll ask for like a 5-year term on the mortgage.
True.
Yeah. So yeah, it's just like one of the more advanced nuances, I guess you could say, on a deal that could help to get a property like this. I honestly love the property. Like it's absolutely stunning. It's really cool.
It would be so perfect.
Would be maybe worth actually taking a look at and I think it would make for some cool content as well of you touring this property. But actually, like, this is out of what we've seen so far, I think maybe the least accessible, but the most sexy deal.
Yeah.
Uh,
I need to, so if it is like a condo
yeah.
strata type situation, what does that mean?
So basically, if it depends if it's condo or if it's like a parcel of tied land, or, and I'm not super familiar with the way that things are communicated in realtor.ca for BC. But what I'll do is I'll call the agent, and maybe next time, if we want to review this deal more thoroughly, we can circle back and determine. So based on my findings there, and I'll even record the call so that we have it for context. We could edit it in, just to discuss whether or not it would make sense. But basically, it could just be like a land lease, or if it's a condo strata on a land arrangement, you own, like, let's say, a share in the condominium corporation, and that share is entitled to the uninterrupted use of X property. That's how a condo building in the city works. So you're allowed to access your unit, which is a share of the condo corp, through the um, main areas that you pay a management fee for, and you go up and you have uninterrupted use of your property, but you technically don't have freehold or fee simple ownership of the unit itself. So you have to actually ask the condo board for permission if you want to do renos and blah, blah, blah.
Right. Interesting.
Yeah.
Okay, cool. 'Cause yeah, it looks like looking into it, there's this mountain called Baldy Mountain, which you can ski
Yeah,
at.
actually, it says that on the listing here. I'll screen share again so we can go to the next one too.
Yeah, and it looks like it's on that property.
Yeah, so it says Mount Baldy, affordable ski cabin at Mount Baldy. So, I mean, if
Yeah.
that's, and we could here, maybe I'll see if I can pull this up on Airbnb, because this could be a really lucrative one if that's like, and if this is, it doesn't even look like, hold on, Mount Baldy. Yeah, so like from my perspective, I wonder if this one's actually even on there. Like, this is like, there's some good comps. Like, this is more easy to analyze. It's weird that the rates
Look,
don't come up right off the bat.
yeah, that is weird.
But like, this kind of meets that qualitative or like lifestyle return, right? Like, there's like there's a real monetary return, and then there's a lifestyle return. It's like,
Yeah.
this kind of fits the bill of, yeah, this is something that, even if it doesn't make me a ton of money, or if it just pays for itself, the quality of being able to drive there and go do
Yeah.
and enjoy it and whatever, that could be the return there. And I find a lot of young people are investing in that way, especially for cottages and stuff like that. So
I've always wanted a cabin in the woods. Whoa, what's that?
it's a
Hobbit
hobbit
Mountain.
hole.
So cool.
That is cool. I wonder, like, a lot of these probably are on, like, that likely would be in an arrangement, like a condo arrangement, because I can't see a local municipal building department approving a dwelling of this
That's cool.
nature, unless BC, like, I know BC is a little bit more liberal with their building code, but I don't know if they're that much more liberal with the building code.
Oh wow.
Wow, that is cool. Very, very cool. It literally looks like the Shire.
Yeah.
Very cool.
Bilbo.
It actually, did you see that? It has, like, I wonder if this was like, it's like a
A
replica.
replica?
It literally look, it has like Elvish
Yeah.
on the wall there. Wow, I'm geeking out right now hard.
It probably is like some sort of replica. That's cool.
It's an earth house. So yeah, I don't know if so earth houses are very interesting actually, but we could probably get into, I won't get super tangential. Let's move on to the next listing. But that one I really liked. I think it actually has some legs to be worth analyzing. Let me chat with the agent and just see if it's super prohibitive on the title perspective, and then we'll go
Yeah.
from there. Okay. Okay. 7330 Shalal Road in Kelowna. It's vacant land?
I don't know. Is it? Looks like there's something on
Oh,
it.
there's like a portable of some sort. Let me just see. It is weird. They don't have any like actual interior photos. Okay, so
Yeah.
off the bat, that dwelling, I don't know how well. Kelowna's like a more established town, right? Like,
Super established.
yeah.
Like this price is not seen in Kelowna.
So it
Oh,
says,
I guess it is just flat land.
but there's something on it. Like, I'd really have to see the land registry boundaries on this, which is kind of a bummer. that they haven't, but there are specs on a building here. So you got bathrooms, one bathroom.
Yeah,
Honestly, it looks like a construction portable.
true. Could
Um,
be.
but you know what? I mean, again, you're not going to unlikely to get financing. Land vendors, I find, are more willing to entertain the idea of a vendor take back. There's like a canoe here, so it looks like maybe whoever is doing the portable concept on this is doing so maybe as a cabin or something like that.
True.
I would say just based on a quick look at it, likely worth discussing with the agent whether or not you could buy it and occupy that dwelling. They're probably not going to make any representations. Like it might just be a bit of a roll of the dice. It's like, could it be grandfathered, what, and so that would be probably part of that discovery there. I don't
Yeah.
think we really need to analyze Kelowna on a
Yeah, because
market
it's
level,
strong.
because I would say it's a strong market. Like, if it was an actual dwelling, you'd have no problem renting it out.
Yeah.
Could you build a house here? Could you live in it or Airbnb it in the meantime while you're waiting to get a construction mortgage or save up some more money to build a house? I don't know. That's probably that would be the big add value there. Any other questions on that one specifically?
No, I don't think so.
Okay. About a third of an acre. Yeah, I mean, good building lot. A lot of tree removal and stuff, but otherwise decent. Could be a good place if you were at that level where you wanted to build the house, right?
Mm-hmm.
Actually, I wish I didn't close that one in the downtown in Headley. Maybe I can. I don't have my notes here, but I can pull it back up. There we go. 840 Scott Ave in Headley. The reason that one of the things that I forgot to mention on this one that I like is that, you do see some 2-story mixed use commercial buildings in this town. Whether or not I know, I am confident saying that you could see long-term potential growth in an area like this as seniors start to exodus from the city. Could that downtown Headley grow to the point where this might be an infill lot for maybe a triplex or ground floor commercial or something?
Yeah.
I would say, maybe in a couple decades, or and you kind of roll the dice with a town like this, and similar to some of the ones in Ontario, Kirkland Lake, et cetera, because it does depend a lot on that local employment. But I think that here you kind of get the hedge that it could also do all right as a Airbnb or like a tourism destination too, right?
Yeah, I feel like it would be worth probably visiting the town just to see what's up, because it looks like it's super, super small. I wouldn't even know if there's any shops or restaurants there yet.
Yeah, well, one of the things that I'll often recommend people do, especially as Airbnb investments, is go out, go stay at an Airbnb, get to know the host, talk to them a lot about how the experience has been, how do guests treat the place, what kind of guests are you getting, what do people do, right? And then go eat at a local restaurant and talk to the owners and ask about, what's going on, and get as many qualitative perspectives as you can if it's actually an investment that you're potentially interested in, right?
Yeah.
Okay. Next we have Squamish.
Yeah.
Okay. This is that duplex.
Yes.
Okay. Yeah. So this one we can kind of give it a more cut and dry analysis.
Yeah. Basically, I just want to get an understanding of in what scenario would this make sense.
Right. So I don't know what Squamish is on a cap rate basis as a market, but that seems really expensive to me as a duplex at 1.3 mil.
Well, I don't know if it's considered a duplex actually.
It does have 2 kitchens though, right?
Yeah, it does have 2 kitchens.
So let's just say it's got 2 units.
Yeah, I think it says in the description.
Right. Maybe. Okay. Yeah.
Yeah, 2 units, 1,500 square feet on each floor.
Yeah. So I'm not buying a duplex for less than, I would say, a 7 cap. And basically, if you're to do the math, so on a cap rate basis, I want I'm very, I don't know, liberal with my calculations of a cap rate. So, but if I were to just calculate the quick and dirty napkin math,
yeah,
on a deal like this at 1.33, let's say, million, at a 7 cap, So what I did to determine this is I just multiplied 1.33 million times 0.07 or 7%, which is the return I'd be hoping to get. And this ignores all of the nuances of expenses and stuff like that. But this is what I'll use to determine whether or not something's even worth looking at. So this property for me needs to make $93,000 a year. So the number there is, actually, I guess I can stop the screen.
Number, it says 58, yeah. So you were
93,100. So from my perspective, and so if you divide that by 2 units, 46,000 per unit, 46,550 per unit, and then divide that again by 12 months.
I don't think that's going to be happening.
Needs to make $3,900 a month
per unit.
Per unit. Now, I'm probably an unreasonable investor in regards to what the yield that I see, and that's why I go for towns that I can still get a 7 cap in, because you see a place like Keswick or Barrie where you're probably below a 4 cap right now, so your annual return is 4%. But the reason that people look at markets like Keswick and Barrie still is because they have the stability. They're part of the GTA. They're gonna, if you're going with the inflation thesis or the capital appreciation thesis of real estate, they're more likely to grow in value than a place like Kirkland Lake or Cornwall or Headley, BC or whatever, right? My perspective on the matter, I guess, like that's sort of the educational answer. My perspective, if it matters, is that a place like Headley, BC likely will grow just because of inflation. Like that house that we looked at on the main road in Headley, you couldn't build that for, like, it would cost you a minimum of $250,000 to build that house today, right?
Yeah.
So from my perspective, that's kind of the advantage, is that eventually somebody will be broke, a boomer will retire and not have enough money to retire in Squamish or Penticton or whatever, and they might have to move to Headley, right? Because we have a massive demand for people who want to live in Canada and buy homes in Canada, and that's like the trickle up inflation rather than sort of the trickle down economics, right? We call it trickle down inflation, right?
Yeah.
And you see it here in the GTA quite clearly, like, on the rental side, like if somebody's getting, and this is how it happens in the market. If you are a tenant in a property, you're paying $1,600 a month. Your landlord is like, wow, the market's insane right now, I'm going to sell. Buyer comes in, buys the property, evicts the tenant at $1,600 a month. That tenant now is rent seeking. They've got to go out and find a property somewhere that they can replace, that they can still afford within their budget at $1,600 a month. If you're getting evicted today at $1,600 in Keswick, you're going to Aurelia probably before you find something comparable. At a minimum, I would say Aurelia, maybe rural, like Kawartha Lakes, whatever, right? And this is happening all over the province, and it's probably happening in BC too. I'm just not as familiar with the market.
Yeah, same thing is happening.
Right.
Like there's a group of people that probably would have started renting here maybe 2 years ago. And if they're getting evicted at this point, like they have to either pony up and pay or move somewhere else where they can afford, which honestly, I don't even know where that would be in BC right now.
Right. Yeah, I mean, and so this from my perspective, we're at the beginning of that phenomena right now. Unless the market corrects massively or our government figures out a way to meaningfully deliver enough supply to meet these affordable housing needs, that's not going away, right? So that's why I like these rural towns. Like, well, a lot of it is the economics. People just can't afford to live in the places that they might want to. But the other piece is not everybody wants to live in Keswick or Richmond Hill or whatever, right? Like some people want to live in a small ass town in the middle of nowhere. And a lot of boomers, who are the ones who are going to be the ones probably most immediately suffering from this lack of affordability, are the ones who are going to those places, right? That exists. Somebody from Parry Sound who rents right now and maybe is subject to an eviction might have to go to Kirkland Lake in the future. Yeah. The town won't feel that different to them. If anything, they might be grateful that not all the local Muskoka or the local Toronto people are doing their Muskoka stuff around town, right? Like, so that's the kind of quantitative and qualitative. That's why I like these rural areas.
True. Yeah. It's a good perspective.
Thank you. Any questions? I know I kind of went on a bunch of different tangents there, but.
I don't think so.
Okay.
I think all points are valuable. I really liked how you calculated the cap rate for that Squamish property, though. I think that will be.
Yeah,
I
and
think
I
that
guess
just like quick math is valuable for people who are looking at things like this.
yeah, what actually might be, I can show you it in reverse maybe before we go back to the screen share.
Mhm.
So what do you think that would rent for, given that you're in the Squamish market right now?
What is it? 2 bed, 2 bath on each?
Yeah. Actually, 3 bed, 3 bath. 3 bed. One of the units has 2 bathrooms, it appears, because there's 6 bedrooms in total and 3 bathrooms in total. Let's say 3 up, 3 down, and one as an ensuite.
So you could probably get like 35 max for the
For the
three
whole place?
one with an ensuite,
Okay.
and then maybe like 27, 28 for the other
Okay.
one.
So it's not as bad as I thought, actually. So 3,500 plus 2,700. And let's just assume that this is a net cap calculation. So $6,200 a month in net rent. So what I'll do is I'll divide that by my target, or first I'll get an annual rate. So we have $6,200 a month. That's 12 times 12 months. So you have $74,000 a year, 74,400. So I'll divide that by my target cap to determine what I would be willing to pay for the property. So my target cap is 7%. So I divide this by 0.07 and I get a price of just over $1 million, right?
Mm-hmm.
So it's about 30% over what I would be willing to pay. Now what we'll do is we'll determine what the actual cap rate of the property is. And they might actually have, I'm actually on the listing, there is an income. I wish I was paying.
Yeah, it says 58.
Yeah, okay. So let's calculate. So that would be market rent. So if you were to evict and restabilize the unit, you might be able to get it up to, or it might be able to pay $1 million at 58,000 a year. So 58,800. And you divide, so you take your 58,800 and you divide by 1,329. Sorry, just give me a sec. Times 1,329. Sorry, 58,800 divided by 1.329. So you have 0.0442. So I'll multiply that for 100 just so people by 100, so just so people can see that. So it's a 4.42% cap rate. I'm imagining that Kelowna probably functions like a market like Barrie, maybe. Would that be like a decent
Squamish?
Yeah. Or like Collingwood?
I don't know how Barrie operates.
It's like qualitative character. Is it similar to that Barrie's role in the GTA, or is it more like a Collingwood or Parry Sound?
Well, people definitely like living here because of the lifestyle, so it's
Right.
qualitative in that sense.
So maybe like a Collingwood. So Collingwood, you might still be able to find like a 5 cap, but it's probably like a 4.5 to 5 cap market.
Mm-hmm.
So imagining that BC functions very similarly to Ontario on an investment basis, that property will probably transact at that price, right?
Yeah.
For me, I'm not paying, because I'd have to either put 30% down, 35% down to make that deal make sense, or or I'd be losing money, right? So that's why I wouldn't buy that.
True. Fair enough. It makes sense.
Yeah. Maybe it could make more sense, like if if it was within your price range, if you could occupy one of the units, get a 95% loan to value, and it was paying a portion of your mortgage a month, might make sense from that perspective. Like there's a variety of scenarios in which it works, right? Okay, let's go back.
Yeah, but I'm assuming if you're gonna do that, like, why would you do that if you're gonna buy a $1.3 million home?
Yeah, I mean,
if you're gonna buy this home, I think you're like a real estate investor, and
you could be an investor, but investor is such a loose term right now. Like a lot of people are speculatively purchasing real estate right now. Like they're basically buying it as if it's a stock that will increase in value. Or right now, it'll be subject to inflation. And so, somebody might buy it for that reason. Even if the yield is low, if it costs them $100 a month, but it's going up in value by 10% a year,
Yeah.
just the appreciation pays for that cost, right? This is what condo buyers have been doing in the city in Toronto for, a decade,
Right.
losing money, and because the appreciation makes sense. That's sort of where Canadian real estate is at, right? That's why everybody's so obsessed with it. You can get leveraged exposure to inflation.
Right.
Yeah. Okay, let's go. Oh, so just so if anybody wants to know, you can see in this listing description here where I got that. I don't know if can you see my cursor on the screen share there?
Yep. Yep.
That's where I got the income, and that it doesn't say whether that's net or gross. I'm assuming that that's gross. So then you still have to take your expenses out of that for the calculation. I guess it's worth noting as well, just for the audio side of things and for the video, that we will do more thorough, like, single episodes on each different investment thesis. So we'll do likely one for the Airbnb. We might do one for investment property. We might do one for building your own home, a custom home, maybe figuring out whether or not somebody could be a first-time builder. I've seen it happen many times. There's actually a guy on TikTok. He's one of the bigger real estate guys on TikTok. And he's always like, I don't know if you've seen it, but he's like, don't buy your first house, build your first house. Here's why. And he's doing like those pointing videos.
True. See, it's all about the pointy fingers.
Not a big pointy guy.
I haven't made it to real estate TikTok. I'm, I don't know.
Yeah.
I need to figure out how to get there.
This is the listing I sent you, right? This Cobden one?
Yeah.
Yeah.
Yeah. So the last three are Ontario-based properties. This is the one that you showed me.
Yeah.
I think I picked another one in Cornwall, maybe, or I don't know. There seem to be a lot of properties under 250K around the Ottawa area.
Yeah, like rural Ottawa, I would say is very interesting from my perspective. So we'll analyze this property quickly, and then I'll get rid of the screen share and we can talk about rural Ottawa a little bit, because probably all of these listings will qualify. So you've got one in Cornwall, that's a duplex, single family, and then
this Thunder Bay one.
Thunder Bay. Okay, so this one in Cobden, obviously an absolutely beautiful house. Based on the vintage of the home, you're probably going to run into some problems down the road, likely some deferred maintenance, likely some challenges with maintenance. Maybe not a cheap property to hold, but its address is 5 Main Street. It is likely in the best location in this small town available to a residential investor. I would say the other better locations might be occupied by plazas. The income on this property, the reason I know so much about this property is because I'm likely bringing an offer on it. So the income on this property is $750 and $700, and that's net. Tenant pays heat and hydro. So the only thing that's not included in that is the water and sewers. Your tax expense is pretty clear at $2,000 a year, which is actually relatively expensive for taxes on a property like this. Like that's like a 10% mill rate, or sorry, a 1% mill rate.
What's mill mean?
That's like the rate at which the municipality uses to calculate the taxes on a property. So yeah.
Sure.
Yeah, and so based on my conversations with the agent on this one, tenants are great. There's been no rent delinquencies. That's one of the things I investigate first when buying a turnkey duplex. And then I'll start diving in on, because like if I'm going to buy one, I'd rather buy it turnkey, even if the rents are below market, rather than dealing with the headaches of getting new tenants in and rolling the dice on whether or not I get a good or bad tenant, right? Especially right now. They've done a lot of maintenance here, 2 hydro meters, basement spray foamed and insulated. I mean, I really like this asset. It's a beautiful home. So
it's beautiful.
Because we just
was that a lake?
No, it's near a lake. There's like that's like this giant lake. I can't remember the name of it now, but it's a popular fishing lake, and
Muskrat Lake is what it's called.
Yeah, Muskrat Lake. Yeah.
True,
Again, great location. Obviously, a smaller town, so you have the exposure of whether or not this municipality ever will actually like survive. But I don't see there being ghost towns in Canada, honestly. Like, I don't think we're going to end up like the US where you have these empty municipalities.
Yeah, I don't think so.
Let me just end this screen share here. not end the meeting. Okay, so that one we have 750 plus 700, and we know we're closer to net here because you really just have the taxes and water to pay. So 1450 a month is your income, right? Multiply that by 12 to get your annual income. So your annual income is 17,400. If you want to understand the cap rate or your annual return on this property, divide it by the purchase price. So assume that you're paying $250,000 for this property. And you have a 6.9% cap rate, 696. I could round that up probably to a 7 cap. That's sort of where my target return is, 6.96%. Can I decrease the price a little bit to get it sharper? Probably. Can I make the building run a bit more efficiently to reduce costs? Probably. So to me, like, this is something where you can expect this property to pay for its mortgage and likely deliver you a little bit of residual cash each month on top of the mortgage payment if you buy it. From a price perspective, it's really accessible. The next thing that you really need to decide is whether or not qualitatively you like the market. Do you believe in Cobden, Ontario, right? I've done a lot of research on this town, so I would say the answer is yes, but that's like the heart of buying something, and this is what you're learning about where you are. It's kind of like a stock picker's market. You get to pick different areas where you think there are good opportunities and decide if it's something you want to invest in. So yeah, from my perspective, that side by side, that's a much better, objectively, a better investment than, and this is a good example of a house that from a replacement cost perspective, you couldn't build this house for $500,000, right? So you're buying the property, even after depreciation, you're buying the property at a negative land value. This thing functionally has a hard time going down in value.
Yeah.
So that's sort of my perspective on that. And similar to the one in Headley, it's in a main road of a relatively established small town. Could it later house a tech innovative doctor's office who only shows up in town once a week to get all the appointments of the local boomers who, book online? Hell yeah. It's a great building and location for that, right?
That's an extremely specific example.
Yeah.
You've been thinking about that one.
Well, I'm just like thinking, what is that? Like I've analyzed this asset, right? So
yeah.
Where's the future potential for this thing? Like I'm not imagining that this thing's going to run a doctor's office in 5 years, but I'm wondering.
But could it?
I just wonder what the world looks like in a decade or 2 decades, and whether or not this thing has potential. And the good part is it doesn't matter whether or not it has upside potential because I'm getting it at a good return.
Right.
I think the next thing that you would think about is how much am I going to put down on this, and what do I calculate as my sort of more real return, right? And so we can do that maybe if people actually want to see how astronomically insane leverage can be. So if you were to buy this as a principal residence, actually, I won't even use that example. I'm going to use 20% down. So if you buy this, so you take your income again, so you're 750 plus 700, 1450 times 12 months, 17,400 a year. And so you're going to put down probably 50 grand on this property.
Yeah.
So divide 17,400. And again, I'm ignoring interest, expenses, etc., but this is just for simplicity's sake. Divide 17,400 by $50,000. So your estimated return annually, that's a sort of it's not really cash on cash because you're not getting cash out of the property,
right.
But this would be, I just call it real return, but the amount of equity that you're getting, again, ignoring interest, et cetera, but you could reduce this by 10% for current interest rates, but you're getting a 34% return on the 50 grand that you put down here. Like literally, so if you divide, like basically that means that in 3 years, you have made your money back.
Yeah.
Right? Like where else are you going to do that? Go buy a stock and tell me. Like, I mean, obviously the market's crazy right now, maybe not the last 2 days, but
yeah.
So this is the part that really makes you look at it and be like, holy shit, there's something real here, right?
Mm-hmm. That's for sure. So you're going in on that property? You have a buyer though.
Yeah, I might partner with somebody and go in on it. I don't know, I'm just so busy right now, but we will likely offer on it this week. Yeah, why you want to come in?
I gotta find one of those out here.
Yeah, it's a nice deal. So, and I guess the thesis that I have is that, Ottawa hasn't really developed like Toronto. And Montreal is kind of like it was the world-class city of Canada before. And then, so I look at a place like Cornwall as an example. One of the things that attracted me most to Cornwall is that as Ottawa and Montreal do their Torontoism, which if Canadian immigration goals are met, will happen, you'll start seeing a suburbanization of demand associated with that, like that sort of trickle down inflation. So Cobden, Ontario, a little bit outside of Ottawa, could it be the Muskoka of Ottawa, or maybe the Kawartha of Ottawa, because like Muskoka got too expensive for people or whatever, right? These are things that's sort of how I think, I'm thinking 10, 20 years from now.
Definitely.
And those are just like, you as an investor, you kind of just come up with an idea and you're like, that's what I think is going to happen. That's why I want to focus on buying in a place like that. Right. Yeah. I won't even touch the other ones because I know we're kind of, we've probably gone an hour. But they sort of fit the same thesis here. Better cap rate. Similar suburban exposure. Anything I didn't cover? I know I like just was kind of rambling like crazy there, but
no, I think it's good. Like, I think like ultimately I don't have experience dissecting and like figuring out if it's a good investment or not. So I think this conversation was going to be focused on you anyways.
Right.
And I think it's great. I think there's a lot of like things we could dive into, like potentially fleshing out the deal that you're about to do, maybe like as much insight as you could provide into like how you're thinking about it and like breaking down the numbers and like what the mortgage will look like and like what the expenses will actually look like. And then also finding out more information on this like potential Airbnb A-frame thing. And like, I don't know if that is a good deal, like I will jump all over it because I've been talking about building an A-frame cabin in the woods for like, since I got here.
Okay.
And the location just seems good. Like it's close to Penticton, it's close to Kelowna, it's on a ski resort.
Yeah, my only fear with that one is the ownership structure. So let me also doing some discovery there, and then do you want to call and like inquire about that one?
I can.
And maybe record the dialogues and stuff like that. Just and I'll kind of do the same thing with mine. I do have a cottage that we've had tied up for 3 years. That's finally coming to a head. Not a cottage, it's a cabin. So similar property. So if we need to, from a content perspective, I'm happy to use my example. But maybe if you figure it's a worthwhile part of the educational process for you to do that discovery on your own, we could do that, or we could even just do a conference call so I can ask some of the questions if you want to maybe be taking notes or whatever.
Yeah, I think. Well, I mean, I don't know. I just don't know the exact questions to ask, but I'm happy to do it if.
Okay. Yeah. So actually, so what I'll do is I'll just have a high level chat with the agent just about what is the land structure, the tenure structure on the land there, and then if I think that it's really worth diving into, we can go after it. And in the meantime, maybe I don't know who you've been speaking with as a lender, but discuss with your bank or mortgage broker how they would feel about a deal like that. If you send it, maybe we get some feedback. So then we at least have kind of 2 areas that this thing could get shot down from, and we'll start removing question marks. That's what I find that this process is about. Right?
Cool. That sounds good. Yeah, I have like a couple mortgage brokers that I've been chatting to.
Okay.
Basically just need to send them my tax information, and that's what stage I'm at.
Yeah, I'll send it to Johnny as well, just to see if there's anything that he can see, because I know he does deals all over the country. So to see if there's anything he can do, right, or he can say right off the bat as an element of feedback, if and then we can. So maybe next steps would be we'll do an episode on analyzing that deal. We'll do an episode on analyzing this Cobden deal. So you've got sort of the Airbnb investment thesis, which I think is going to be popular for a lot of young people, and then you've got the just regular rental investment thesis, and
Yeah.
then we'll talk to our viewers and see what they'd like us to uncover next.
Cool. That makes sense. That works for me.
Amazing.
Some TikTok ideas that came up when we were chatting. The first one was Air DNA. Like, I've never heard of that before.
Right.
And I think it could be a useful tool just to like put on blast and put out there to the world.
Yeah, for sure. I would agree. Let me pull one up on the screen share here, just so you can get an idea for it.
Cool.
May have. Did you check it out on your own screen, or?
No, I haven't opened it yet.
So I'm searching Headley, British Columbia, but I'm not sure. No.
Oh,
okay,
cool.
I got Squamish. Yeah, so again, like, you have to pay for the full report, but they will give you a limited amount of just like short market insight reports. So I'm going to put up Squamish right now. Okay, yeah. So what it gives you is you've got your average daily rate in the high and lows of season. So April seems to be the worst. It's actually interesting that July is higher in Squamish. I guess, is it more of a biking town than a?
Yeah, it's biking. Yeah, biking and kite surfing are like huge here.
Okay. Occupancy rate. So August would be the highest at 87%, which is insane. You don't see many Airbnb markets like that. Even at March, like 50%. This has obviously changed since COVID and everybody's traveling domestically, but 50% is good, even for a down season. Revenue on average. So this might be like, and again, I would use this to analyze. Like, I would say that I've analyzed a handful of deals using this tool, and it's almost always spot on. And so it'll show you again, like, your competition. So who's renting, entire home, private room, rental channel. So, you're probably going to do better on Airbnb than Vrbo, obviously. Rental size, number of bedrooms, guest on average.
I think there's some Airbnb thing here though now. I'm not sure.
It might be. So and this is where, again, like, that's actually one of the things that we should probably discuss a lot when you're thinking about the Airbnb model, is, especially with a condo corp, condos can technically dictate what you do with your unit, right? So if they don't allow it, boom, that's right off the table right away, right? Then the other thing is, municipality can dictate what you can do. So they can have a bylaw that doesn't allow you. And it's happening in Keswick right now because they have all these party palaces along the lake that were just like investors buying them and renting them out. And the whole town, the Keswick just basically became like Wasaga Beach on prom night, right? And so that would be step 2 of discovery. Can we legally do this, right?
Yeah.
And maybe step 1, if you just want to, like, you don't want to get your heart set on something and so determine. But Keswick's a good example where it technically has to be your principal residence. So like, if you say you live in this cabin in the woods, which honestly, as long as you spend one day more than 50% of your time there, you can rent it out. So you go there as often as you possibly can every time that it's not rented out or whatever. And then, it's still your principal residence. So that's what Georgina has right now. Basically, people who want to have Airbnbs, that it has to be their primary residence.
Interesting. Okay. Yeah, that makes sense.
So yeah, so we'll add that to our list of things. Maybe we'll create a list of things to do to analyze that deal, and then we'll and a lot of it you could probably do yourself. Maybe we can film some TikToks doing it, etc.
Yeah, agreed. Yeah, another thing that came up that I think is useful for TikTok is calculating the cap rate.
Okay.
Like all the different ways that you did it.
Yeah.
And then kind of a different video, same kind of thing though, is like how you decide like what your goal cap rate is.
Right.
Or like tips on how to think about it.
Yeah.
And then The third thing was just like high level, like promising real estate markets, up and coming markets in BC and Ontario. Like you could do 2 separate videos, or we could do 2 separate videos, just like are you a millennial looking to get into real estate? Like check out these towns type
Yeah.
of thing.
Yeah. Okay.
With our little dance and finger pointing.
I'm not doing any dancing or finger pointing. That's all you.
Yeah, I'm down. I'll do whatever.
All right.
I'll do whatever.
Okay, so yeah, I like the next steps. I think this episode is going to do well. It's sort of like leading people into the more analytical side and the visual side of the series here. And let's just keep engaging the audience and figuring out what they liked and didn't like, and
Yeah, sounds good.
add value as much as we can.
Did you end up buying the my brain is not working.